perhaps, Paul, you could kick us off. It'd be interesting to get the conversation underway, just talking about when you're advising clients, what are some of the key drivers they're looking for in wealth management? Are they looking to make a quick buck? Are they looking for short-term returns in markets, or are they approaching you discussing something with more of a long-term time horizon for themselves or perhaps the next generation?
Thank you very much, David. I think both, but I think the most important thing is for us as financial advisors, as wealth managers, is to actually settle down the conversation to what is the real client goal? What do you really want to achieve? Because it's easy to say I want to make money, or I want 10%, I want 20%, but so that you do what, right? So when you make that money, so what are you going to do? And this gravitates us back to what we call life goals. And last year, towards the end, we did a survey. In 10 markets, Kenya was included in that survey. And we found that clients had actually changed their life goals, mostly prompted by the COVID pandemic. And some of the top goals that came across were improve their personal health. So that was one of the key goals that came up. Their children education and future was another goal. So that also leads into legacy planning and all that. There was a retirement, comfortable retirement, and generally to improve their lifestyle and wellness. So these are the top 4 goals. And really, the kind of advice and conversation we're having with our clients now is really asking them, how are your goals like? Have they changed? And if they have changed, are you ready? Are you ready for your new goals? And if they have not still changed, are you still on track from where you were before COVID? Are you still on track? Your finances are on track to actually meet these goals.
Okay, thank you. Very interesting. And Paul, I mean, the currency question must be something that you're constantly looking at with clients because it's a critical factor. How do you approach this discussion?
Yeah, so thank you very much. Yes, definitely. If you're in any of the African countries, let me say emerging markets, because sort of Asian, South American economies, you'll find over time the currency will slide away versus, I would say the big 4 or 5 currencies. And because you're looking at generation wealth here, you have to be thinking, above 10 years into 20 into 30 years. And we have enough charts and graphs to show us that currency have lost value to the tune of, 50 odd percent in the last 15 years. So that conversation hits home when you look at it from that perspective. The other perspective to look at it is from inflation. And this is now very topical across everywhere in the markets. And just to ask ourselves that is the rate at which your wealth is growing either at pace or higher than the general rate of inflation, because that is the actual purchasing power of the currency, or is the preservation value of the currency or your investment. So that's how we approach the conversation. The good thing is, from where we are and being a global bank, we're able to offer our clients, based on their existing relationship in country, capabilities to invest across the globe, pretty much everywhere, and in pretty much all investment grade assets across any market across the globe. So then the conversation really grounds very quickly. We're able to show them you can actually put your money in China here now, or in the US, or in the UK, or probably in another African country. So those are things we're able to do. Yeah. Is
cryptocurrency a distraction in that discussion, or is that part of the picture that you see as an evolving space that clients may well get involved in over time?
David, you can be sure I knew this question would come up, because in every session with my clients, I answer this question. So I was ready for it. But these are the thoughts. So firstly, we don't take crypto as an investment category. And we don't encourage our clients to put a lot of their net worth into crypto. We actually ask our clients, if you have to do it, don't do more than 5% of your net worth, and just treat it as any of the other items, collectible items like paintings and those kind of things. Now, if you hit it big, you hit it big. But also there's a risk that you could also lose it. So you just have to restrict it to that level, treat it as such. I think we want to concentrate more on thinking about, more of the traditional assets, assets that are liquid, assets that generally, preserve value, and assets that can be passed from generation to generation.
And which regions do the clients that you work with in Kenya and East Africa tend to favor? Do they like the US S&P? Do they like investing in the American economy? What's the view on it, getting exposure to India or China? Where does their interest lie? Is it into getting blue chip equities and bonds in developed markets is what they're kind of coming to you for, or where do conversations tend to go? Paul, I think you're back on with us. I was just asking about which regions clients from East Africa like investing in, and Abidola said from the West African perspective, from the clients she deals with in Nigeria, they look to the UK for property, or UK and US markets for blue chip investments, but also South Africa. What is it that you see in terms of regions that are popular with the clients that you speak to?
Yeah, so I would say about half of the clients, like slightly more than half, like to invest locally. I think just on the back of better returns and give or take fairly stable economy. Kenya has been quite stable for a period of time, but more and more we are seeing clients get into the US market. So US market is, in terms of the best performing investment category in the US, mostly S&P, tech, they love US tech. We are seeing interest in China now, and of course, because we have also introduced quite a bit of variety of products from the Asia, mostly China economy. So that's another area we are finding quite a bit of interest. More recently this year, we've seen quite a lot of growth in ESG, ESG type investment categories. Again, because I think globally the news towards being sustainable and all that. So we are seeing a little bit of move of portfolio towards ESG type portfolios. Yeah.
Interesting. And is that in African countries in African companies with ESG strategies, or just on a global equities?
Global equities. Yeah. Global equities.
The demand there is being driven by clients. Are clients more educated around this space of ESG and more demanding of it, or is it that is there more supply side in the sense of more banks are talking about it?
I think it's the supply side. I think there are more products now. People are coming to say, okay, my investment is green. And of course, you have to be very careful that we don't have greenwashing. But I think that the news are out there. So clients are starting to ask, okay, what about this? The good thing is also that during COVID, I think clients spent quite a bit of time studying how the future may look like. I think they spend time studying material and attending, I guess, webinars and all that. So they are more informed. They seem like they're more informed than they were before. Yeah.
Okay, thank you. And Paul, how do you see it from East Africa? I imagine, again, SMEs, family businesses, it's the engine room of the economy. Is that right?
Absolutely. And I think it will be the same thing as what Abiola has said for Nigeria. I think the only one thing I wanted to add is that, how are we helping SMEs so that they actually get into the next stage? I think one of the things that we found is, from a wealth management perspective, of course, there's the banking aspect, giving them credit and all that to help them expand. But from a wealth perspective is firstly, to help them create passive streams of income. I think one of the things we found during COVID when there was lockdown is that some businesses could not open, they could not get income, they could not be able to pay their employees, and they had to probably even get rid of their very good employees or give away their premises because they could just pay rent, right? So we are finding it important that we create a passive form of income for them by investing in liquid assets. Therefore, then when they need to run during tough times, then they can be able to tap into this liquidity and keep their business afloat. The other thing we've also found very useful is to tap, whatever wealth they have invested in, we create a credit line for them. And that has come very handy. So we create a credit line for them. We're thinking about protection as well. And I know maybe we may discuss protection or not, but really one of the things that you find in most African businesses, and including individuals, is that the level of insurance is very low. So businesses leave themselves very exposed. And one swipe at it from a risk point of view, be it as a result of climate change or be it as a result of, whatever it is, human error or natural calamities, really puts the business completely out. So that's another area we are really building capacity around. And of course, the whole area of advice and wealth transfer. So we are really clear that as an organization, we need to support these businesses in terms of the basics of actually surviving and the basics of transition.
Okay, yeah. Interesting. Paul, just coming back to you on the family office front, Abiola set out what she sees on the governance side. Are you seeing more professionalization in governance? I imagine you are often working with trustees or other professionals who are managing structures where you are undertaking an asset management, investment management role? How do you see the professionalization of wealth structuring?
Still in the very early days. I think similar to what Abiola has said. I think there's still a lot of work to happen. Firstly, to convince this family that indeed they need to professionalize it, and more important, for them to feel that indeed that is the right way to go to ensure that their wealth transition and is sustainable. So I think a lot of groundwork needs to happen, and really we need to bring more players into the play. Of course, from a legal perspective, there's a requirement in terms of the structures which then would work with the relevant laws, the tax planners and accountants, and of course banks and of course wealth managers. I think this is very early days. I still believe that, and if you step back, David, and we can all step back a bit. If you think about it, most of the African nations got independence around the late 60s and into the 70s, right? So if you count just by any family that right off the independence started becoming either business people or they went to profession, if you look that time, it's about 50, 60 years, right? So that means it's the first time in the history of these nations that wealth is transferring, the very first time. And really, we are the people at this one time of God has given us this to be here now, to be the first people who actually help the first major wealth transfer in Africa. So we haven't practiced this, we haven't. That is the reality on the ground. So we have to, of course, some mistakes will be made, and I hope there will be fewer. But really, it would be better off for a family that actually goes some sort of professionalization. Mistakes are likely to be less than those who leave themselves completely out and think they may get it right. So it's very important, and I think if I'm feeling passionate about it, it's exactly that. We are at that point where we have to help these families to actually transition wealth, the first time ever in these nations. Yeah,
fascinating, Paul. Advice, Paul, just a perspective on African diaspora investing back into the economies, seeing growth, and interested to try and capitalize on it. How can they navigate those local markets?
Yeah, I think growth, return, and risk are siblings. So always look at it from that perspective. In my view, I actually don't look at it that way. I look at the whole globe, as a one big investment possibility, because all you need to do is to balance what is your risk appetite versus the return you're looking at. Now, if you have knowledge and experience, and of course, if you can use a professional to be able to get to the African market, that can help you reduce the risk in a big way, while maybe maintaining the return. So that could be a good way. But if you don't, then I would say, I think there's no point, because the risk will be disproportionate to the return you'll get in the market. So that's how I look at it. And it's complete wealth management. For me, I'm completely open to any asset class, as long as it's an investment grade asset class. And I look at risk return, period.
Fantastic.